Hi, and welcome to Market Insights, where we analyse the key economic events that could have impact on the financial markets in the coming week. Well, with major announcements from the US, including the FOMC meeting minutes, inflation data, corporate earnings reports, traders should prepare for some potential volatility, much like we've been seeing with the tariffs that have been imposed. So let's dive into the details. Well, we'll start with the US FOMC meeting minutes. They're set to be released on Wednesday at 9 p.m. GMT +3. Now, this report will give us a deeper look into policymakers' views on the economy, inflation, and future interest rate decisions. Back in March, the Fed kept rates unchanged at 4.25 to 4.5%, continuing its cautious approach to monetary easing. Now, markets could see increased volatility, especially as investors continue to react to Trump's newly announced tariffs. This policy shift has already impacted the US dollar, so traders should watch the dollar quite closely. Last week, the dollar slid broadly after Donald Trump announced the more aggressive than expected tariffs against its trading partners. It certainly sent some shockwaves through the markets, and investors have scrambled towards so-called safe haven assets. Just take a look at the price of gold. So it's really important that you stay alert and keep your risk management techniques on point. Okay, next up, and this Thursday at 3:30 p.m. GMT +3, all eyes will be on the US inflation report. Now, economists are warning that if President Donald Trump's newly announced tariffs are fully implemented, along with existing import levels, the US and global economy could face a deep recession. Moody's Analytics chief economist, Mark Zandi, suggests that the potential exceptions and subsidies from the White House might help the US narrowly avoid a downturn, though this won't allow the economy to grow. Now, with this inflation data set for release, market turbulence is likely to increase. Last month's report showed lower than expected inflation, yet since it remained above the Fed's 2% targets, markets didn't take it really as a sign of inflation easing. The uncertainty led to a sharp volatility immediately after the announcement. So it's going to be key to see if that trend continues. So stay tuned, keep your eyes and your ears open for those all-important figures. Now, on Friday at 3:30 p.m. GMT +3, we're going to get another key inflation-related release, and that's the US Producer Price Index. Now, in February, the PPI for final demand rose 3.2% year-on-year, following a 3.7% increase in January. Meanwhile, the core PPI climbed 3.4%, lower than January's 3.8%. On a monthly basis, the PPI remained unchanged, while the core PPI dipped by 0.1%. Now, although this data brought some relief on inflation concerns, the US dollar strengthened against major currencies as traders focused on broader economic risks. Now, this week, don't just focus on that headline number. Dig deeper into the details to stay ahead of potential market trends and sharp movements. And finally, meanwhile, in the US stock markets, traders are bracing for even more volatility. And it's not just from Trump's tariffs, but also from corporate earnings season. Now, on the 11th of April, major financial services corporations will release their Q1 2025 earnings reports, including JP Morgan Chase & Co., Wells Fargo & Company, and BlackRock. Now, earnings results can have pretty huge impact on stock prices and overall market sentiment. And with all the uncertainty around trade policies, it's more important than ever to stay prepared and manage your risk effectively. So that wraps up this week's Market Insights. With so many economic and geopolitical factors at play, market volatility is expected to remain very high in the coming days. For real-time updates and expert analysis, visit the news and analysis section on our website. Thanks for watching, and we wish you luck with your trading in the week ahead. Bye for now.